Welcome to the simplerstocks.com video. My name is Don Kaufman. I'm going to be taking you through a trade today and kind of a trade setup. Well, specifically on the XLF. What is the XLF? It is the financials. What's the trade setup that I'm looking at today? First and foremost, I have been taking a look at the XLF. I'm very familiar with this product. Traded it, really since the inception of this particular ETF. And when you take a look at the XLF, there's a number of things that I'm seeing right now. Number one over here. It appears in the shortest duration that we actually hit the 25 level, okay, not only yesterday but today, and kind of failed off of it ultimately in both trading sessions. Previously, we did the exact same thing. If you want to look all the way back to late December time frame, hit that 25 level right in the exact same neighborhood. So we're hitting up against some pretty significant resistance, but I'm not that much of a market technician. No, I happen to be a bit more of a quant. And a quant, sometimes you're reading into relationships, sometimes ultimately you're reading into what's kind of going on behind the scenes. Well, there's a few things that I've actually seen that are going on kind of behind the scenes today in the XLF. One of those happens to be in the options activity. So even though this is simplerstocks.com, you still have to look at more than quote unquote just the stock side of things, or more than just the technicals of a breakout or a breakdown. In this case, we're going under option statistics and thinkorswim. First thing I'm going to point out, the current IV percentile. I'm like, oh, what is that? I'm not really familiar with that. It's ranking where implied volatility has been over the last 52 weeks. It doesn't surprise me that much. However, the implied volatility is rock bottom in here. Okay? Granted, though, shouldn't the implied volatility be rock bottom? That means the risk in the product. The risk, and looking 30 days out into the future, the risk is inherently low. Again, as it should be, because the XLF is kind of approaching, all right, very near its recent highs. And I say recent highs because if you go back a number of years, the XLF has gone above 25. And again, when I say like a number of years, you really got to back up. If you look like a 10-year monthly in the XLF, there it is. And what happened down here? It's called the financial crisis, led by none other than the financials. Nevertheless, we've had an incredible rebound, okay, from the financial crisis over there. However, I'm kind of left in this, area where we've seen recently bonds selling off and selling off big. So I'll go over to the bonds for a moment. Now, bonds selling off big is bringing interest rates up. That should, support the financials substantially. It appears, that the bonds are starting to stabilize to a degree. We've seen both the ZB and the ZN. The ZB being the 30-year. Here's the 10-year. The 10-year even showing, again, more support at its current levels, which is trading right around 127. And we've actually seen that previously, a little bit more support. If the bonds start to rally up, undoubtedly, it's going to cause pressure, forth to some of the financials. So here we have a day, again, that was very lackluster today. The financials backed off negligibly, like 0.3%. The implied volatility is inherently low. I get it. Here's the other kicker. There's ridiculously high volume on the puts today versus the calls. Now, is that unusual? Well, if you take a look over to the right-hand side here, it's called the sizzle index. The sizzle, what that means is there's 1.3 times, the normal activity in puts, but there's almost no activity in calls whatsoever. So any activity that really took place today inside of the XLF, there has been heavy put activity in there. And if you do look at put call ratios, the put call ratio is almost 4 times the number of puts traded ultimately than calls. So I'm just adding up a couple of pieces of a puzzle over here, which is, again, we seem to be hitting a bit of resistance. This is a short duration trade looking to get short the XLF. If you are going to trade it in options, please use some type of a vertical spread, and manage your risk with that spread. Thanks a lot, everybody, for joining me for the simplerstocks.com video.